Students, in this video, we are going to see about accounting interest transaction in the average due date. The average due date is a financial calculation used to determine the single date which multiple payment or debt with the different due dates can be settled with the incurring any interest. It is an often used in accounting and finance to simplify the management of accounts payable and receivable. The average due date is a financial calculation used to determine weighted average due date of two set of the invoices or bills. It takes into an account both amount due and the members of the day until each payment is due. By calculating ADD, add, and business can be better manage their cash flow and periodize the payment to optimize the financial efficiency. Key concepts of average due date. Multiple payment date. When a business or an individual has a multiple payment or debt due to the different dates, calculating the average due date helps in the consolidation, and it comes under average due date. The calculation of average due dates involves determines the weighted average of an individual due date where the weights are amounted of the individual payment of the debt. List of payments and debts for their due dates. Identify all the payment debt, their respective due date. Calculate the number of days before the base date. Choose the base date. First, while calculating the average due date, first of all, we have to calculate the base date. With the base date only, we can calculate other things. So calculation of number of days, the base date is must. So choose the base date and calculate the number of days from the base date to each individual due date. Multiply the each amount column and its correspondence. This gives a weighted number of days. Then sum the weighted days and total. Calculate the sum of weighted days and total amount of payments or debts. Individual and the total weight days to be total amount. Determine the average due date. With these examples only, the average due date can be calculated. Okay, average due date. The formula for calculating the average due date is sigma amount into days to due date into total amount, or else total amount sigma amount into number of due dates. And the main benefits of average due date: improve the cash flow management. Improve the cash flow management. Add help the business predict when the payments are due more accurately. By knowing the average due date of invoice or bills of business can better plan their cash outflow, ensuring there is sufficient fund available to meet their financial obligation on time. Optimize the payment scheduling. Calculating the ad allows the business to periodize the payment based on their due date. This helps to avoiding late payment penalties and maintaining a good relationship with the suppliers and creditors and other stakeholders. Reduce the risk in the late payment. Late payment can be incurred penalties, damage relationship, and harm credit rating. By using the ad reduction of risk of late payment. Late payment can incur penalties, damage relationship, and harm credit rating. By using average due date, business can schedule the payment more efficiently and reducing the likelihood of missing the deadlines and incurring such penalties. Benefits of average due date: enhancing the budgeting accuracy. Average due date provides more accurate picture of when expenses will occur, enabling the business to create more realistic budget and financial forecast. This helps in allocating the resources effectively and minimizing the financial surprise. Streamlined accounting payment process. Average due date simplifies the accounting payment process by providing a clear understanding of when the payments are due. This enables a business to automate the payment scheduling, set up the reminder, and establish the efficient workflow and reducing the manual effect and administrative overhead. Improve the vendor relationship. Paying invoice on a time enhance the trust and credibility with the vendor and supplier. By using the average due date to manage the payment schedule, business can strengthen their relationship with the suppliers, negotiate the better terms on potential access to discount the early payment, enhance the financial planning and decision making. Having a clear understanding when the payment due allows the business to make an informed decision by incorporated to it. Thank you. In next video we will see the next concept. Thank you.